If you want to know whether to save your money in the bank or invest it in properties, this video is for you. Hey guys, it's Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. In today's video, I'm going to share with you what lots of investors have been asking me recently. They've asked me, Rahim, I've got this money, I want to invest it in property, or perhaps I want to save it. What is the best advice do you have for me? So this video is for those people. And again, before I carry on any of my advice, I advise you to seek legal and financial advice before you actually implement what I'm going to share with you. But what I'm going to be sharing with you is what I do and implement with my investors. So let's get to it. So in this video, I'm going to talk to you about the return on investment, the risk levels, liquidity, and how inflation can help you, and the tax benefit, as well as managing either your savings or if you've got a property, an investment property. So I want to walk you through the step-by-step using a real-life example of a deal versus using £30,000 we have that we're not sure whether to invest it or to actually save it. So let's get to the points first, and then I can then use the example on a board to get you to understand what I am talking about. So let's get to it. So return on investment. Bank savings offer you less return on your investment. It also offers you stable returns through interest. So in essence, you put your £30,000 in the bank and the bank pay you the interest every single month, or perhaps if you agree on a yearly basis, they pay that every year. Whilst properties provide higher return through rental income and property appreciation. And again, you're gonna see the analysis in a minute when I'm showing how this thing works. So in essence, what we are trying to say here, basically, you can use that £30,000, buy an investment property, you rent that property out, the tenant pays you rent out of the money you make from that property, then obviously you make profit from there. And as we all know, property prices also go up in value. So in essence, if you buy a property 2-3 years down the line, that property may have gone up by 10, 15, or even 20%. So you make money that way as well, versus just having your money in a savings account and you wait for your interest payment coming to you every single month. Again, I'm gonna go through an example. That example will blow your mind away. So bear with me. Number two, it's important for you to know the risk that involves it as well. You see, bank savings are low risk with guaranteed returns, obviously, because the bank will tell you, hey John, I will pay you X amount every single month, and that is guaranteed to you every single month, regardless what happened, okay? Whereas with properties, it carries higher risk due to market fluctuation, property maintenance, and perhaps not having the actual rent you were hoping to get. But however, if you know what you're doing, you would always get it right. Number three, liquidity. Now, when you've got money saved in the bank, it's highly liquid because you can walk into the bank today, the right seconds, ask for your money, you get your money straight away. It allows you to access the funds easily without waiting for a very, very long time. Sometimes you can walk in there, 5 seconds, you got your money, you're out of the door. Whilst properties, it is less liquid and it can take time to sell. Suppose you want to sell your property, it might take a few weeks or sometimes even a couple of months for you to be able to sell it and get whatever money you need. So that's one of the distinct differences as well. So if you're one of those that like to walk into the bank, get your money straight away and go and do whatever you want to do with it, maybe savings is for you. But if you're one of those who likes to invest in property for long term to make serious return on your investment and make money work for you a lot harder than anything else, perhaps property is for you. Because if you remember, my first example is that you make money through the rental income as well as capital appreciation. So you think about it. Number four, inflation. Now this is a big one. This is a big one. I love this part. Okay, with property, it often serves a better hedge against inflation compared to bank savings. Let me explain. Suppose you've got £30,000. You put that £30,000 in the bank. Okay, and the bank agrees to pay you 5.5% every year for the next 2 or 3 years. It's all good and well. You're making 5.5% every year, which is kind of good at that point. However, if inflation goes up, suppose inflation went up by, let's say, 6%, right? And you are on 5.5% on interest, okay? In real terms, you are losing money because the money that you're getting in the bank is going down in value every single month or every time because inflation is at 6%. In essence, you're not going to use that money to buy the same thing that you want to buy last year at the same amount because in essence, the prices has gone up and the interest you're going to get, you're getting paid is less than the inflation, meaning you're making minus 0.5% loss in your investment. Okay, let's look at property. When it comes to property, you make money in two ways, as we already know. We have first one, which is the rental income. Suppose your rent this year is £1,000, okay, and your tenant has moved in and they've got a 12-month contract. Inflation is exactly the same because it's calculated in a almost yearly basis or quarterly basis, okay? So you can pay the £1,000 until the tenancy is about to expire, the 1 year ends. So when the 1 year ends, what you do, you look at what's happening in the market, where the inflation is, and you increase your rent accordingly, okay? When it comes to your interest payment, it does not work like that. In most cases, once you've agreed on interest payment or interest rate, that's it. It's not going up, it's not going down, it's fixed, regardless what the economic climate is. But when it comes to property, you can increase your rent every single year, whether inflation goes up or goes down. Literally, you are increasing your rent every single year. Again, that's an additional income. Whilst your interest you've got in the bank, if you're clever, is in a fixed rate, whilst your interest stays the same. So guess what? Your margin started to increase gradually as time goes on because you're increasing your rent every single year. That's one way properties hedge against inflation. The second one is this. This is big. I love this one. This is literally blow my mind away. And one of the things why I invest in property is what we call capital appreciation. When it comes to property, it goes up in average in the UK between 8 to 15%. Okay, suppose I've got £100,000 property. Fast forward to next year, that property went up by 10%. That same property would have worth £110,000. Fast forward to another year, you're talking about £121,000. I would have made £21,000 just in capital appreciation. But the icing on the cake is, remember the 75% they've lent me, right? The value of that would have gone down drastically because in essence, inflation would have eaten into it. Okay? And what I do, I go and remortgage my property, pay them their £75,000 with some more money in the coffers because the bank will lend me 75% of my £121,000. So out of that money, I pay my existing mortgage, make the difference, and go again buy more houses. Hence the reason why investors love property. I've never seen a successful individual, a millionaire, a decamillionaire, a billionaire who has not got real estate in their investment portfolio. They always have it because it's one of the best investments you could ever make because it stays afloat and it always support you when things goes wrong. Okay, because it always literally is there for you, whether inflation goes up, goes down, countries in recession, not recession. As long as you're renting your property, a tenant is paying you money, you still make money every single month. Let's look at the sixth one. The sixth one is a very tricky one. And that one you want to be taking note of as well. Management. You see, when it comes to savings, obviously there's no management there. You put your money in there, the bank works with it. There's no active management. You don't have to manage it. Literally, you get your interest every single month without lifting a finger. Whereas when it comes to property investment, it may require ongoing management and maintenance. What do I mean by that? Suppose you've got your property, maybe you've got one buy-to-let or maybe two buy-to-let. You want to manage it yourself because it's not lots of things to do. That might take you maybe 10, 15 or maybe 30 minutes a week to make sure your property investment is going. And maybe your client may ring you or your tenant may ring you saying, this has broken, that has broken, how can you fix it? It requires that sort of time, okay? So you involve a bit of management there. However, if you want to be an investor, you can push this property to an estate agency to manage, and then that then reduces the time you get involved to look after your property portfolio. It doesn't necessarily mean you can walk away from it, get the agent to do anything they want with it. it will still require your attention. Suppose they need a repair and maintenance done, they will call you, the landlord, to tell you what the problem is and ask you if it is okay for them to get someone there to go and fix whatever needs to be fixed, and they will tell you the price. So if you're happy with the price, you just say yes, go for it, they fix it. If you're not happy with the price, you have to get someone that you know, or a builder, carpenter, whoever that it may be, for you to go and check, fix that issue. That then requires a bit of time to get that going. So that is the management I'm talking about here. But if you're clever, been working with me, I'll help you automate the whole process. Let's now look at the £30,000 that we have. Either we can use it to get the bank to pay us interest every single month, or we can use that same £30,000 to invest in real estate, or some people call it property. Let's say that £30,000, we've used that £30,000 now to buy an investment property. So in order for you to be able to buy an investment property in the UK, you'd have to kind of have a deposit down in order to buy that property. Let's estimate we went on and got a £100,000 property. We would have put down 25% to buy that £100,000. Let's say the £5,000 would be legal, transaction cost, stamp duty. That then gives us the £30,000. The average rental price for a £100,000 property would be, let's say, £1,000. So £1,000, if you're doing properties, that's what would be your gross rental income. We've got our mortgage interest to pay here, assuming that our interest is at 5% per annum. Our mortgage monthly interest payment would be £313. Okay, and then obviously we have our running cost. In essence, we have our repair and maintenance and management fees to pay. Let's estimate that to be £200. Okay, £200. So if we minus £313, £200 from the £1,000, that will leave us with a net profit of £488. So we make £488 every single month for investing only £30,000 in buying an investment property. Let's now look at it the other way. Suppose then we put that property in a bank savings account or ISA account, whatever that may be for you. The current going rate is about 5.5% per annum for savings and ISAs out there. Okay, so with that £30,000 at 5.5% interest rate, we'd have a monthly income of £138. So in essence, we'd have a monthly income of £138. So that would be our monthly income. So if you compare this to here, you would see the difference. So let's look at the annual, because that's one, it would motivate you and get you to understand a lot more. You can make that 30,000 work a lot more harder than putting it in this bank. Okay, so if you times that by 12, that will give you an annual profit of £5,850. Okay, and then for this one also, the interest you receive every single month, which is £138, if you times that by 12, it gives you £1,650. So again, have a look at that. You can see then it is no-brainer to obviously invest in property versus leaving that money in the bank, making you only £1,600 per year versus investment property that will give you £5,850 every single year. Looking at the analysis, we make better return on investment properties than putting money in the bank and make interest from them. However, it is important to discuss the risk that is involved in buying an investment property versus leaving your money in the bank or in an ISA account. When it comes to investment properties, obviously you've got the risk of tenants not paying you the rent, for example, and also it is not a liquid asset. it takes time for you to be able to sell the property to get your £30,000 back or to make any profit from it. And then obviously it's not something that you're going to go walk in quickly and then get the money from it. Whereas if you're looking at your savings, if you want that £30,000 now, you can walk into the bank, ask the bank for the money, the bank will give you the money straight away. And obviously it is liquid, you can get it whenever you want to get it. It is also safer than buying an investment property. So hence the reason you can see the interest reflect the return you get as well. Okay, and also when it comes to saving money in the bank, also the downside of that, one, the return is very, very low, as you can see from the analysis here. And secondly, the interest rate doesn't normally include inflation. So if inflation is say 7%, for example, and you're getting 5.5% on interest, you are net about 2% down. In essence, your money is depreciating in value more than what you're getting. So this £138 is not really a money that you're making, because looking at inflation, you are actually losing in real life, because that £138 will not buy you the same amount of items you bought today in about a year's time. So in essence, you're losing that way. However, if your interest you're getting is more than the inflation, then you may be making a bit of money there. Suppose inflation is say 5% and your interest is 7%, you're making 2% difference. Again, that's how much you may be able to make in order for you to be able to make a little bit of money from that. But the beauty about property then, one, obviously you've got the risk, you've bought that, but the beauty of it, you've got someone paying for the debt every single month, paying you £1,000. From that £1,000, they get you to pay the interest. They pay for your interest. You make that £313. And then they also pay for your expenses as well. You pay for that expense and you make a handsome £488. Again, if you don't know what you're doing, or perhaps you don't know how to manage properties, you don't know how to manage tenants, this cost you see here is literally for that. You can buy the property, give it to an agent to manage it, and you don't have to worry about any sort of problem with tenant or sort of maintenance. We can get the agents to do all that for you. And the beauty of investing in property also, it hedges against inflation. While inflation goes up, guess what? Your rent goes up, as well as the value of your property also go up. So in essence, the more the inflation increases, the more value your property and your rent would go up. You may be thinking, how does my rent go up? In essence, once you've got your tenants moved into your property, you're gonna give them 12-month contract. So after the 12-month contract expires, obviously you're gonna go and look at inflation, look at interest rate, and then obviously you increase your rent accordingly, okay? And whilst your interest rate is still the same. So in essence, you tend to make more money as well when you increase your rent. And now let's look at the tax advantage as well. With real estate or properties, you still get tax benefit as well. So you can deduct all these expenses and then pay minimum tax. However, if you're doing an ISA as well, sometimes the government have these tax exemption ISAs and all that sort of things, so you're not going to pay any tax on your ISA savings. It's only because you're going to make lots of money, okay? The bank will use that money, lend us as investors to make this serious money, and then they use the money we pay them here to give you a little return from that as well. So it is a massive tax benefit here as well by investing in property. So savings from the bank do not require you to do any management. Obviously, just put the money in there and then you get your interest payment every single month. But when it comes to property, you may want to manage it if you wanted to manage it, or maybe if the agent is managing it, they may ring you to find out what you want them to do if there's any issue with renovation work. It takes about maybe 30 minutes or an hour a week, but that hour or 30 minutes a week or month worth that amount there, because obviously making you £488 every single month. Now there you have it, bank and property. Which one do you choose? For me, based on this analysis, based on my due diligence and all the stuff I've done with you on this video, I will go for properties whole day long, because it makes my money work a lot harder for me instead of relying on £138 every single month. So this is a no-brainer. I'm happy to take all the risk involved in buying an investment property, even if I have to pay a coach or a mentor to help me, mentor me to make this sort of return in my investment. I will do it whole day long. So there you have it. There it is, saving versus real estate. I will go for real estate whole day long. If you'd like to learn how to implement strategies like that, there's a link on this section below. Click on that link, book one of my specialists. They will talk you through the best way we can work together to help you start investing in properties and make your money work a lot harder for you. I really hope this video has been helpful. If it has been helpful, smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one. Thank you.